Hello everybody and welcome back to Trading with CJ. Now today we're going to be talking about why now is the perfect time to start investing. Now before I get into the video, I must say that I'm not a financial advisor, so anything you hear or see in this video is purely for educational purposes. You should always do your own research if you're planning on investing in the stock market. Now before you even consider investing, there's two things you need to bear in mind. Number one, you need to make sure that you have cleared any debt. There is no point in starting investing if you have any debt that is weighing you down. Now, I'm not referring to like a mortgage or anything like that. I'm talking about short-term debt where you've got high interest rates. If you're trying to make a profit on one hand and on the other hand your debt is just weighing you down and down, it's counterproductive. You want to make sure you clear the debt first. And the second point is make sure you have an emergency savings fund. If you only have like £100 in a savings account, then you do not want to be investing it, because say something bad happens where you need to dig into your savings, you don't want to have to worry about withdrawing this money from your investment account. It might not be the right time. So always make sure you have enough money back up in your savings account. Now, let's say that both of those things are fine and then you're ready to start investing. So why is now the perfect time to start investing? So unless you've been living under a rock for the past 2 or 3 months, then you will know that we are currently in a global pandemic. This means that most of the world is currently on lockdown to some form of extent or other. Businesses have been affected and the stock market is affected worldwide. Businesses are closed and they are turning over much less than there was 3 months ago. So if we take restaurants and retail, yes, you can still get things online by delivery or stuff, but they are closed, so they're still not earning as much as they was. Holidays and travel companies, nobody's flying, you can't go on cruises anymore, and nobody wants to book a holiday. Most sectors have been hit, therefore taking massive losses in the last few months. Now, not all sectors have been hit. Some companies are actually thriving from this and actually earning either the same or more than they was. Companies like Netflix, they really haven't dropped in the last 3 months. That's because everyone's staying indoors watching TV. And then one massive company to point out here is Amazon. So if we look at the Amazon stock, in the last 3 months, they have actually gained growth. They are 14% up, which is just mad. And in the last year, 20% up. Now, that's because everyone's obviously ordering from like at home and stuff. And they're actually, a few days ago, they was at their peak. So if you look, just a couple of days ago, they're at the highest. They're still around about that, the highest that the stock has ever been worth. So the companies like Amazon, it hasn't affected them at all. If we look at another example here, so if we look at IAG, which is basically an airline collection of companies, and British Airways is their main one. In the last year, they are down 60% and down 62% in the last 3 months. Now this graph is quite an extreme version, but a lot of companies look similar to this. They were at quite a high point and then come around mid-February, mid-March, they dropped to some extent or another. Now this one obviously dropped massively, 62%, which is huge. So that's because obviously nobody is booking any flights anywhere, and these airplanes are just sitting at the airport costing them money. So there is a massive drop. So what does that mean for us as investors? Well, that means that there are great quality companies around the world, some of the best in the world, currently trading at a discounted price. They're on sale, effectively, 10% off, 20% off, 30% off. And that's from no fault of their own. That's because people physically cannot go out and use these products, or they're not allowed to do that. So once the world gets moving again, providing they survive the lockdown, then they'll go back to where they was trading at, or even half of that amount, or even more than what they was trading at. As long as they survive, the chance for growth there and the chance for a profit for you and I is huge. So there are two main ways that people get into the stock market. One is by buying individual stocks, and the other is by buying ETFs. Now we're going to cover both, but I'll just cover individual stocks first. So I'm going to talk to you about one of my favourite individual stocks, and one that I actually hold in my portfolio, and that is Disney. We all know Disney, it's a household name. And if we look at where they were trading at in the last year, they are down 21%. And in the last 3 months, they're down almost 24%. And that's quite a big amount for such a well-known and established company. It was actually down 30%, but they've managed to bring it back a little bit over the last few weeks. Now, that's similar to a lot of companies out there as well. The market may drop again, we don't know. But either way, at the moment, it is at a discounted sale price. The reason Disney are currently not doing as well as other companies out there is because obviously their parks are closed. Their parks bring in a massive amount of revenue for Disney, Disneyland, and so on. It's a massive amount, and no one can go to these parks. Their cruise lines, nobody is allowed to go on their cruises. Even cinema, these new films that turn over so much amount at the cinema, that's not happening. One good thing they've got going for them is obviously they've recently released their Disney Plus service, which is growing and growing. So that's actually helped them not drop as far as they would have. However, like I said, they are still at a massive discounted price. Now, when I think about Disney, I think, will they survive this lockdown? Will we see the end of Mickey Mouse? Personally, I don't think that's the end of Mickey Mouse. I think they'll be fine. And eventually, it may take time, but they will get back to where they was trading at, and probably even higher. They just grow and grow and grow over the years. So for me personally, that's a safe investment right there. And there are so many companies like that. Yes, it may drop a little bit more. Yes, it may go up more, but either way, right now, it is 21% or 24% off. That's a lot. Now, if we talk about a more riskier company, so for example, Royal Caribbean. Royal Caribbean is one of the largest companies for cruise lines in the world. Now, they've been hit massively. They are down 65% in the last 3 months and around 67% in the last year. Now, it was actually about 70%, and then once again, they've managed to bring it back slightly. Maybe that's just because people think we're getting closer to the lockdown being lifted, or not, who knows. But either way, they are still down 67%. Now, it's obviously a much more riskier company because at the moment, their ships are just sitting in the water, staying afloat, and they have massive upkeep costs. They're not free to just keep there. So every day, they are churning away more and more money and not bringing in a single penny. So it's really a matter of, can they keep that up until they can operate again or not? If they can't, they will go bankrupt unless they can get some sort of grant. Or if they can, then over time, hopefully they will go back up, and then there is a massive chance there for potential profit. It's 67% down on what it was, and this company is one of the biggest in the world. So if it does go back up, you are making a massive return on your money. Now, that's obviously a more riskier company. Now, the second main way that people invest is by buying funds, exchange-traded funds, which are also known as ETFs. Now, there are so many different ETFs you can invest in. An ETF is basically a collection of companies. So you can have the top 500 companies in America, that's the S&P 500, the top 100 in UK or top 250 in the UK. They are the best companies in the world or in that country that you are investing in. So let's take a look at the FTSE 100, which is the top 100 companies in the UK. Now, in the last year, they are down 22%. That's quite a lot, and 21% in the last 3 months. It has rose a little bit in the last few weeks, however, still a 21% discount on where it was 3 months ago. Now, that is the top 100 companies in the UK. Even if a few of those don't make it and they go bankrupt, it really won't affect you because you have another 95 or however many to keep you afloat and even make you more of a profit. There's 100 companies there, so you've got to average it out. Now, if we look at this graph here, this is the Dow Jones Industrial graph, and this is over the last 10 years. So you can see how the market, on average, has just risen up and up and up. So despite any crisis or recessions, it just continues to rise. And it's the same for the last 50-year graph and the last 100-year. It just continues to rise. So although there may be a slight dip at the moment, or this might continue for a little bit longer, overall, eventually this will continue to rise and you will make a profit. ETFs are one of the safest ways of investing, especially if you're picking the top 500 in America or the top 100 or top 250 in the UK. These are the best companies in the world. And as I said, even if some of them go bankrupt, it doesn't affect you really at all. This is on a sale at the moment. It is a discounted price of 20%. The market will only continue to rise. That is a massive amount and well worth investing in. So most of us have some form of savings account, whether it's an everyday saver at your local bank or something along those lines. Most banks tend to pay around 0.5% interest or 1.5 interest at most. It's around that kind of figure. And also at the moment, a lot of banks have cut their interest rates significantly. So on average, you'd be lucky right now if you're making 1% interest a year on whatever you have in your savings. Now, if you're looking at that, you leaving your money in a bank account to grow you 1% a year. You could invest in a fund of the top 100 companies in the UK or top 500 companies in America and make a much bigger profit of either 10, 20% a year. That is 10 times or even 20 times better than your 1%. And if you're investing in individual stocks, then there's even more room for more profit. You could make 30% or 40% just from coming out of this recession, out of this crash. There is a massive potential here for making money. Now, the stocks that I've mentioned in this video, they're not necessarily recommendations. They're just in this video as examples. It's important that you always do your own research if you're planning on investing. It's also important to understand there is always an element of risk, especially if you're investing in stocks, individual stocks. Make sure you've done your research and make sure that whatever you invest, you are willing to lose. You can obviously eliminate this risk or make this risk much smaller by investing in ETFs or investing in great quality individual companies. The one thing I would recommend is ask yourself, do you think this company will still be around after this crisis? Will it still be around in a year? Will it still be around in 2 years? If so, then there is a massive potential for huge profits, 10, 20, 30%. Like I said, these companies are currently at a discounted price. So as long as they are great quality and you have faith and potential, then now is the time to invest. Personally, I will be investing more money. I've already invested quite a lot over this last few weeks and month or so. I'll be putting more in, and hopefully you can follow me on my journey to making this profit as well. If you found anything in this video useful, please give it a like, subscribe to my channel, and until next time,